This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. Jeffrey posted, we've been engaging the past few days on this bullish impulse that I have on dollar and when the 2-year yield will top and roll over. I've talked about that a little bit. He says it's actually a really important turning point. He thinks it's a critical turning point when the dollar and the 2-year yield roll over. Remember, I've talked about this thesis, and here's why. He thinks there's no duration risk on the short end of the bonds, right? Inflation is actually going to be rolling over by year end. So we're not talking July, but like Luke just said, his tips 7-year, it just smashed. So anyway, he really sees inflation will be trending down by year end. Doesn't mean rates necessarily will fall apart because we still have a very solid case of fiscal dominance. That's a confusing one. So this is not really a great trade as it relates to the 10-year or the 30-year, but inflation will be trending down by year end. And also he does not believe in AI productivity gains. Earnings are one thing. Those who can monetize will, but the mass majority won't. And productivity gains, or production, I should say, he calls it AI, has unproductive production gains. So he's not seeing that as a helper. It's nothing. It's just nothing. Massive energy deflation is his theme. Deflation from energy is coming, and it's a stimulus. And all this stuff that they're doing to try and prevent it, it will be in vain in 4 years. It will mean ridiculous waste of money, waste of war spending, etc. There will be massive cheap energy broken by renewables. And that will break the cartel of OPEC. And once the UAE leaves the cartel, all the rats will want to leave ship. We leave the ship. Oil's going much lower. And this isn't just from UAE bringing forward a few million barrels. It is big picture. All of that will cause the 2-year yield to drop a lot. So rates will follow commodities in time. They might start to smell it now. Saudi Arabia is also pulling away from the US apparently, et cetera, et cetera. Anyway, the petrodollar therefore has less value. He puts it a really funny way. He says, would you buy a currency backed by charcoal? Charcoal meaning fossil fuels. So that's his thesis for when the dollar starts to roll over. This ain't today. I still see 103, 105 potential in the dollar. That would be way high. But the point is, I still see a rotation higher in the dollar before a fall. Timing, I'm not there yet. I don't know when that's going to happen, but it's likely going to happen with oil prices and the 2-year yield falling as well. Anyway, that's it. He thinks it's a waste of time for Trump and the rest to go to war and prop the oil price up or the Permian Basin up, all that stuff. It's a waste. They're going to have all types of substitutes and renewables replace country by country by country are adopting more substitutes and less reliance on nat gas, India, Spain, etc. It's coming. There's nothing that Trump can do about it. And what that means, big picture, it is catastrophic for dollar and extremely bullish for gold. But we're not there yet. So we're not there yet. This is a next year, following year, year after that issue. But we're not going to have long before the yen smells it and starts to get supported naturally, which is the other side of that thesis, which would bring the dollar yen back in and the yen carry trade unwind. But that is very much because when you have less exports of dollars, it will rebalance trade and the rate differential will come down. And it's that rate differential that comes down that would be very supportive, and short oil basically is long the Japanese yen. This is all a roadmap for later. This is all about manufacturing surplus and balance of trade and substitutes for oil and petrodollar, de-dollarization. There's a lot of macro themes there. But in a nutshell, I think I gave you the money quotes that I've been talking about the past 2 weeks. And I will summarize all of that hopefully. But long story short, Luke, your inflation break-evens that you are seeing that are now falling with oil is going to be a very big stimulus for Japan. They will have energy deflation. China has obviously deflation, which is a stimulus from their energy prices falling. Same thing. It's happening. It's coming, but the market doesn't know it yet. The U.S. market doesn't know it yet. And BIS does. Bank of International Settlement has already said importers of fossil fuels and exporters of key materials, translation China, stand to benefit, while fossil fuel exporters, translation US, will probably lose out.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.